Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Well, we've never done this before. Before I start a live show, 100 likes in the chat. Never had that before. Thanks to all the Lucasades who have been doing that. Thanks to all of you that are in the chat. Andrew Moody, Samuel Redner, all of you that have been instigating that. That was incredible. Thank you for that. I've never started the show with 100 likes ever in 4 years. So that's something else. The studio is green and red because what are we going to get? A dovish or a hawkish Fed today? Jerome Powell is about to speak live on the show. He's my star guest. He's not anywhere else. He's not talking to anybody else, just me today. Of course, I'm picking up the stream and sending it to you. We're once again in members-only mode. We're always members-only mode now. It's because I want to provide the best service to my members and investors. We have a platinum investor here who pays $500 a month to be a member of my channel. It's the highest level that YouTube provide. There are no memberships in the world higher than $500. You cannot get one. We have it, and we have the highest level. We have a super whale watches our show, and he gets his very own videos. If you become a whale and you are a platinum investor, you get your very own personal videos as well as bronze, silver, and gold, and in sponsor level. On the homepage of the channel, you can see right at the top where we're live right now. Scroll down, VIP Platinum Investors. Literally, that is the highest level of memberships you can have anywhere in the world on a YouTube account. There is nothing higher than that, and we have one. That's a huge testimony to our show, our family, our Lucasades, and the support that we get. It's unparalleled. No one has a higher, you cannot have a higher level than this, and we have it. All right, a whale super investor is in there, and he gets his own videos. You can click on this and you can see, but it will tell you can't see the video. It was made specifically for one person, and if I get a second VIP investor, he can comment, and I will make him or her their very own videos answering very specific questions aimed at them. It's an absolute honor. Absolutely incredible. Can't believe it. There you go. All righty. So we are just seconds away from Jerome Powell. We opened the show with 100 likes. Do I even need to ask for likes today? I don't even think I need to, really. I can't believe it. Absolutely amazing. Everyone liked, everyone subscribed, everyone's a member. Platinum members, red or green. What are we going to be today? Well, we've got Jerome Powell on standby. We're just waiting for another new member. Oh, a silver member this time.
Anders Ericsson has become a member.
Thank you much indeed. Thank you very much for becoming a member of our channel. As a silver member, if you are a YouTuber, you can ask to go on the homepage of the channel. If you've got content, I can promote your channel in addition to all the bronze benefits that you get as well. Oh, here we go. What's this?
Kent Paranormal and Herbex donated £2 through a super chat. You deserve it.
Well, thank you very much indeed. That's very, very kind of you. All right, we're just waiting. We've got 9 minutes to go. If you want all the links, let me give you all the links right now. So if you are in the UK, there's Robinhood UK. You get free stocks. I get a free share. You get a free share, and I'll share with you what I get on the screen. If you are in the United States, there's Robinhood USA. You get free shares. I get free shares, and I will share with you what you get on the screen. If you want to become a member of our channel, what do you get as a member? Well, here's the members video. There are members only live streams. These are members, all our live streams now are members only chat, because we just want to speak to investors, real proper investors. That's what we do. So we are always members only, so I can answer everyone's questions. There are all my CEO interviews. They're all members only live stream, so you can't even see them unless you're a member. We have, if you reply to any of my videos, as a comment after the show, I reply to every single member. Very often make a video as well if it's required. If you are a member, you can ask $5. You can ask for a earnings call. We are in earnings season now. We're starting massively earnings season next week. We go 4 earnings a day, 2 in the morning, 2 in the evening, as we have the main channel and the extra channel. For $5, you can have an earnings call. Not only do you get the earnings call that you want, but you'll also get a video, promote your stock, and we rank #1 for every stock we cover. We're even ranking now for things like rate cuts and the stock market, generic terms that Bloomberg and CNBC don't rank for. Incredible, right? So if you want to promote the stock and hear about it, you can have an earnings call. You can also have a full stock analysis, $5 minimum. You go on the list. We've got about 10 on the list. We will start doing our earnings. We will start doing our reviews again in a couple of days. If you do more than that, you go higher up the list. The top one at the moment is $20. If you do $20, you'll be number one. You'll be done next on a full analysis video. You also can get access to all of. You can get a free song on the Friday concert. Here's the music channel. I'm the World Piano Man. So on Friday at 4 p.m. You can have your first free song. There it is. If you follow me on Instagram and X, I post all my trades before I make them. I posted you my trades this morning. I bought 20 shares of the S&P at 1, 2, and 3 o'clock this morning. Yeah, ask my wife. She'll tell you. Yeah, she's sick of it. All right. So anyway, if you want to follow me on X and Instagram, I will engage with all of you that ask me questions. If you want Seeking Alpha and Alpha Spread, my pro software that I pay to bring you the best service, you get free trials and discounts. Oh, hello. What's this?
Kent Paranormal and Herbex donated £2 through a super chat. We are the best family on YouTube.
Wow, thank you very much indeed. As a member, I will also share all your comments on the screen, answer everyone's questions live as well. I'll come to that. Also, if you're a member, you can call in to the show live, ask me a 10-second question, or you can be on the show all the way through if you want to. When I open the phone lines up, I will tell you, and you can have that service as well. So there are many, many things. Now, we've got a new service as well. Our Discord premium service is now in full swing. Here is how to get on the Discord. Now, we've had a free service for ages for all our founder members. That time is finished now. So everybody that's a founder member, you've already got your 1 month badge, or 2, 3, 4 years. You've already got Discord. You've already sent me a friend request. You're already friends with me, and I'm serving you the best way possible on Discord already. Anyone now joining, it's $2, I think 99 cents a month, and you can get access to Discord immediately. There's no more free service on Discord because I want to be able to answer everyone's question. There's no point having millions of subscribers and millions of followers, and all you do is take people's money and do nothing. What is the point of that? I'd rather be small and provide the best value service, which is why I promise to always increase my services, never increase prices, and that includes inflation. So actually, my prices go down every single year. So, that's just my promise to you, and I've lived up to that now for nearly 4 years. And I've got no intention of changing it. So if you want Discord Premium, there's the link. You will be bombarded by a few scammers. They message you and send you friend requests. It's not me. Look at the username. You will see I'm the only one on Discord who has the real username. Send me a friend request, as I've given you in the chat, and I will accept it immediately. You get access immediately. And we are recording trading videos, which will be available for all Discord Premium members. Also, I will accept a friend request from all Discord Premium members, so you can send me personal messages whenever you like for a personal reply. That's obviously private. It's a personal DM. I will respond to all of my premium messages. Also, you can talk to Sensei Crypto for all the charts, and you can also talk to Ed Nevis, our professional scalp trader, who's paid thousands of dollars to learn how to scalp trade. He will talk to you, and premium customers get priority. Nearly everyone now already is a premium customer. Most of our YouTube members have upgraded, and if you don't upgrade, that's absolutely fine. You get the free service, but obviously the premium service, the priority goes to the premium customers, and so on and so forth. Right, there you go. We are 3 minutes away from Jerome Powell. We are waiting to hear from him. So stand by for that. As soon as it starts, we'll bring it to you. So that's all the links. I think I've given you everything. And finally, at the end of this show, we have the Extra channel where we'll go live 24/7, 7 days a week. Here is a link to Extra. If you click on that at the end of the show, you can join us for the 24/7 support. 7 support. We've just got a new gold member. 7 support. 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 7 support.
InvestorX has become a member.
Right. If you are a gold member, you get bronze, silver, gold benefits, gives you a 1 hour a month direct call with me, a video call with me. Ask me anything you want and I'll help you any way I can. I don't give financial advice. I'm not a financial advisor, but I will answer your questions in the best way possible. So if you want to book that in, you simply go in the chat and say, Martyn, can I have next week? And I'll say, yeah, at 3 o'clock and we're booked. That's it. I'll give you the link and you'll be in. Simple as that. You also get discounts in our shop above and beyond everything else. So there you go. Welcome to our gold member. We've got about 20 gold members now who want their time with me, which is absolutely wonderful. It's an honor for me to be able to talk to my gold members directly in person. I absolutely love it. Would everyone please welcome Investor X into the channel? And don't forget, finally, before Jerome Powell speaks, if you are a member and we only take sponsorship from memberships, I get offered all the time $10, $20, even $30,000 to promote stuff. I'm not interested. I don't take sponsorship from anyone that's not a viewer or a member. That's it. Simple as that. So if you want to sponsor the channel, a business, a website, a charity or a YouTube channel or anything you want, become a sponsor, you go on the homepage of my channel and every day I will drop the links in for you. Right. We've got 1 minute to go. So let's hear quickly from our sponsors. We've got a couple of sponsors here today. So we've got Airborne as a YouTube channel, would like me to promote them. So let me put them on the channel right now. There you go. If you'd like to subscribe to this channel, this is one of our members. He is a YouTube channel. He's got a couple of videos there, but he supports the channel. He's not really bothered about publicity, but I offer it anyway just because he's a sponsor member. We've also got this person here, Crafty Falcon, who's also a member as well. He's just broken through 11,000 subscribers. We'd like to take some credit for that. Of course, there is the link to this YouTube channel. It's one of our members, one of our supporters. You might like to support him. I'm sure he will massively appreciate it. Okay, we're waiting for Jerome Powell. I'm bringing it in now. The moment he begins to speak, we will bring it to you. All right, so stand by for Jerome Powell. We've got our link from
we are primarily
Wall Street.
Investors in business. And so we own gold.
We're waiting. The markets are starting to go up now. I bought the bottom last night, 1, 2, and 3 o'clock in the morning, 3 separate transactions. And I will come to all comments. Let me see if I can get through all the comments quickly before Jerome Powell speaks. We've got Samuel. Every member is shown on the screen. Every member gets a reply from me in the comments and in the chat. Good afternoon, Josh, Jeffrey Diamond, Ninja Cowboy, Jerry Mandarin, evening all, beautiful people, DJ Hayes, morning guys. I cannot believe that you all tapped the like button before the show started. I had 100 likes before the show. I really appreciate it. Samuel Redner was doing that. Family Man 77, let's go. We did it. Just 22 more. Yeah, we did it. So close, guys. You did it. You smashed it. Kent Paranormal is here. Good afternoon, DJ Gamer. Agatha just became a member. Thank you to you. Saab is here, feeling good about the future. Glass half full. It's the money fever. We always go above and beyond for the family. I couldn't believe it. I couldn't believe that you did that. We are nearly 1,000 people watching live. Everyone tap the like button. Let's share this out as many people as possible. This is fantastic. How was your flight? Margin. Val says one word. Margin. The margin man. Maybe it's Jeff Bezos. It's not Jeff Bezos, actually. It's not Jeff Bezos because in his comment to me, he told me it wasn't Jeff Bezos. Just by the way, private comment from him. Maybe it's Jeff Bezos. No, it's not. I guess Jeffrey Diamond. Family. We're waiting for Jerome Powell to speak. We're waiting any moment now. Let me just double check all my feeds.
Inflation and slower growth coming from the tariffs. In that conflict, the Fed chair says, between these mandates, the Fed will judge how far the economy is from each goal and the time it would take.
We're keeping our eye on that.
Fed's goals in those scenarios. The Fed at
Okay.
To wait
Keep
for
my
greater
eye on
clarity
that.
Before considering any policy
Saab
changes.
says hello to everybody. They have Powell on the ropes today. Yes, indeed. A little bit. We've got all of these coming through. The best positive channel and great group of individuals in here. Much love and respect to all. Stay safe out there. JJ, good morning. Ninja Cowboy, I'm trying to get through all the comments. Investor X became a member. Investor X, please, everyone welcome Investor X. Wow, I'm loving it. Brian Bynum, our contact for Virgin Galactic. Market selling off now, just before Jerome Powell. This is what happens if we go down to the what's the number I'm looking for? The 470. I'm ready to buy more on the S&P. 485. So it's below what I paid for last night. I don't mind that. I don't mind that at all. I'm an investor.
Those imports will.
I'm waiting for Jerome Powell to speak. We're keeping an eye on it. Good morning. Market's going down before Powell speaks. This is perfectly normal. You might be able to pick up. I've got a buy order. I always have buy orders set. Always. It's Mark Cuban. No, it's not Mark Cuban either. I know who the premium member is. Josh Monroe. Oh, hang on. I don't think so. I don't think you do. Cheerio, everyone. He's anonymous. Awaiting blast. Only joking. I have no clue. Right, okay. Stand by for Jerome Powell. Markets are selling off prior.
Wilf, it looks like at least the numbers right now show.
Stand by. Jerome Powell will be on stage at the Economic Club of Chicago coming up in just a moment. Market selling off. If we get to 470, I'm buying again. All right. This is a temporary blip. This is what happens. Market sell off before Jerome Powell speaks. It's an opportunity to buy back. You know when it drops like this, it's going to come back up again. Okay, I've got through all the comments and all the questions. All right. Okay, now then, we've got 966 watching. Can everyone tap the like button as you welcome for Jerome Powell? Okay, little treat. This happens extremely rarely now. This never happens. We're going to go general public to the audience for 1 minute. Everyone can comment now. All right, this will only last for 1 minute. So if you're watching and you want to comment on the screen, we never open up our channel for members to the general public, but just for 1 minute, I'm going to give you a chance to do it. And the minute counts from now before Jerome Powell comes up. 1 minute, open to the world. Everyone can comment. You've got 1 minute. When that reaches 12:35, it'll close. When that reaches 12:35, it'll close. Let's see if we've got anybody that isn't even a member. Every single person now is a member of our channel. 98% of our live viewers are members, more than any other channel in the world. Way more than Mr. Beast. Here we go. 30 seconds to go. Look out for the trolls, anybody. If we get a troll or a bot, make sure that you get rid of them because we get lots of trolls and bots. We don't want that. How do I join? Someone's asking me how they join.
In the next few months. Currently, I had the
8 seconds to go. Look at all these people coming in. Lovely to see you here. Love you too, David. Thank you so much indeed. In 3, 2, 1. There we go. There we go. We wanted to give everyone the chance to comment. We'll just end that now. Lovely stuff. That was a bit of fun. We have to be able to comment to all our members, so that's why we're in members only mode. We're waiting for Jerome Powell to speak. That's why the markets are going down
as well. And I guess a lot
Stand
linked
by.
to that is what the dollar's doing. What do you make of these comments from the Fed chair? And does it alter your perspective about domestic versus overseas?
Now, some of you asked how you become a member. So here is the link to becoming a member. I've explained all the perks and benefits. There's the member video. There's the link in the chat, how to become. That was fun. It was pretty crazy, wasn't it? 1,000 people watching, it suddenly goes bonkers. If you are on an iOS device, which is an iPad or an iPhone, then you need to select a browser. And then you need to select desktop version of that browser. That's how you become a member. Right. Jerome Powell, is he about to take the stage?
Further to
We're
that,
waiting.
one of the things that...
what are we going to get? Rate cuts? What's going to happen? Here's Jerome Powell, live on the show. He's taken the stage.
In the labor market. And so there are a bunch of different considerations here. As we've looked at the world, we felt that some of the policy uncertainty.
And thanks for that kind introduction, Austin. So I'm looking forward to my conversation with Professor Rajan Raghu. But first, I'll briefly discuss the outlook for the economy and monetary policy. So, at the Fed, we are always focused on the dual mandate goals that Congress has given us: maximum employment and stable prices. Despite heightened uncertainty and downside risks, the U.S. economy is still in a solid position. Employment and the labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective. The labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective. Turning briefly to the incoming data, we'll get the initial reading on first quarter GDP in a couple of weeks. The data we have in hand so far suggests that growth has slowed in the first quarter of this year from last year's solid pace.
That's what he wants.
Despite strong motor vehicle sales, overall consumer spending appears to have grown modestly.
That's what he wants.
In addition, strong imports during the first quarter, reflecting attempts by businesses to get ahead of potential tariffs, are expected to weigh on GDP growth. Surveys of households and businesses report a sharp decline in sentiment and elevated uncertainty about the outlook, largely reflecting trade policy concerns. Outside forecasts for the full year are coming down, and for the most part, point to continued slowing, but still positive growth. We are closely tracking incoming data as households and businesses continue to digest these developments. In the labor market, during the first 3 months of this year, non-farm payrolls grew by an average of 150,000 jobs per month. While job growth has slowed relative to last year, a combination of low layoffs and lower labor force growth has kept the unemployment rate in a low and stable range. Meanwhile, the ratio of job openings to unemployed job seekers has remained just above 1, near its pre-pandemic level. Wage growth has continued to moderate while still outpacing inflation. Overall, the labor market appears to be in solid condition and broadly in balance, and is not a significant source of inflationary pressure. As for our price stability mandate, inflation has significantly eased from its pandemic highs of mid-2022.
Rate cuts
without
coming.
the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. Progress on inflation continues at a gradual pace, and recent readings remain above our 2% objective. Estimates based on the most recent data from last week show that total headline PCE prices rose 2.3% over the 12 months ending in March, and that excluding the volatile food and energy categories, core prices rose 2.6%. Looking forward, the new administration is in the process of implementing substantial policy changes in 4 distinct areas.
Please tap the like button.
Trade, immigration, fiscal policy,
it will really help.
and
Thank
regulation.
You.
These policies are still evolving, and their effects on the economy remain highly uncertain. As we learn more, we will continue to update our assessment. The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs. Survey measures of longer-term inflation expectations, for the most part, appear to remain well anchored as well. Market-based break-evens continue to run close to 2%. So, as we gain a better understanding of the policy changes, we'll have a better sense of the implications for the economy and hence for monetary policy. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully to prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. As that great Chicagoan Ferris Bueller once noted, life moves pretty fast. For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. We continue to analyze the incoming data, the evolving outlook, and the balance of risks. We understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. We will continue to do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to our discussion.
Strong Fed, all under control.
Thank you very much, Chair Powell, for those remarks. I look forward to your elaborating on them in the course of the next 40 minutes or so. I understand last time you were here, Melody Hobson interviewed you. Well, I'm a poor substitute, but I'll try and compensate in the quality of the questions. As you repeatedly emphasize, communication and transparency are very important for the Fed. I would like to get more from you on some of what you just said. As a former central banker, the only sort of caution I've been given by the Economic Club is to not lapse into central bank speak. So I'll try my best not to do that. Let me start by saying you've guided the Fed through some really difficult events, including the pandemic, the dash for cash in March 2020, the great inflation, the banking crisis centered around Silicon Valley Bank. And then over the course of the last year, we've seen a growing possibility of a Fed-engineered soft landing. And now it seems like everything has changed. In the course of a couple of months, JP Morgan has shifted to estimating the probability of a recession this year at around 60%.
We could already be in a recession. This could be the bottom.
Well,
that's why I'm buying.
First of all, thank you for being here today. It's a pleasure to be here with you. Actually, the appearance I did here was my very first appearance as chair 7.5 years ago. So it's great to be back. And I would agree with you that it's been an eventful 7 years. Putting it mildly. I keep waiting for the 3 months of calm, that never comes. But to your question, I guess to set the stage, let's look back at 2024. 2024 was a year where the economy grew 2.4%. Unemployment remained in the low 4s, close to mainstream estimates of maximum employment. And inflation came down and was running at the end of the year around 2.5%. That's the economy that we had. And I won't decide how to characterize that, but that's where things were. Where we are now, again, to your question, is the administration is, as I mentioned in my remarks, is implementing significant policy changes, and particularly trade now is the focus. And the effects of that are likely to move us away from our goals. So unemployment is likely to go up as the economy slows in all likelihood, and inflation is likely to go up as tariffs find their way, and some part of those tariffs come to be paid by the public. So that's the strong likelihood. And my hope is that we'll get through this and get back. Well, we're always going to be aiming for maximum employment and price stability. That's what we do. I do think we'll be moving away from those goals probably for the balance of this year.
I've just bought 10 more shares of the S&P 500.
And then we'll resume that progress as we can.
Let's talk a little more
That's
about
typically the
tariffs.
overreaction we get. I've just bought another 10 shares.
That some of the effects of the tariffs will be one-off, transitory. But you also have said that perhaps they will give room
483.97
for firms to raise prices. You mentioned dryers. When washing machine prices went up because of tariffs, dryer prices also went up in tandem, even though they weren't tariffed. What's your sense about the effects of tariffs on inflation? What would make them more persistent? And
just there on the screen,
would, make them have effects on growth?
So in a kind of a simple starting point is one tariff comes in that gets passed along in prices and raises inflation, but it's just a one-time thing. So the price level goes up, and that's it. But that can happen in some circumstances, but it depends on a number of things which we don't know yet. And I would point to a couple of them, or three of them actually. One is just the size of the effects. And as I mentioned, the tariffs are larger than forecasters had expected, certainly larger than we expected, even in our upside case. We looked at a range of cases. So that's one. The second one is how long does it take for the tariffs to have their effects on inflation? To the extent it takes longer and longer, that raises the risks that the public will begin to experience higher inflation. They'll come to expect it, and companies will come to expect it. So
please tap the like button to share it out to more people.
And the third is just what I mentioned in my speech, which is my remarks, which is got to keep inflation expectations well anchored. So if we have those three things under control, that's what it will take. And indeed, our role is to make sure that this will be a one-time increase in prices and not something that turns into an ongoing inflation process. That's a big part of our job.
What about the effects of tariffs on quantities? With the level of tariffs that, for example, have been currently applied on China, there's a fear that the supply chain may get disrupted, that firms may not be able to import their relevant stuff from China given the level of prices. If it turns into a supply shock, would the Fed's response be different than if it was primarily something which affected just prices?
So I actually had dinner at the Chicago Fed last night and with a number of directors of various parts of the Chicago Fed, and many of them are CEOs of significant companies, and they this uncertainty that they're feeling and the issue with imported components to their products is just a huge issue. But with if you look back at the pandemic, if you remember, there was a shortage of semiconductors, and that led to a shortage of cars at a time of extremely high car demand, and it was a prolonged.
Oop, I apologize. Go to backup screen. Backup screen. Sorry about that. Stand by. We've got backups. Don't worry.
What would have been a one-time inflation shock to be extended, perhaps more persistent, and we would worry about that. In this case, you can look at the car companies, which their supply chains are likely seem to be on track to be disrupted significantly, and you would worry that that process will take some years and that the inflationary process might be extended. So these are all of this is highly uncertain. We're thinking now really before how they might affect the economy, and that's why we're affect the economy, really, and that's why we're ultimately waiting, and then we can make a better assessment of what the economic effects will be.
Let's move to immigration. You talked about the labor markets being in reasonable equilibrium right now. Of course, what we've seen over the last few months, months of the previous administration continuing into this administration, is immigration has fallen off considerably. What's your sense on how that will affect the labor market?
So part of why growth was so strong in the last couple of years was just very high levels of immigration, and those people went to work. The economy hired them. There was a lot of demand. We were still working off the labor shortage. What's happened since the prior administration changed their policy, as you mentioned, immigration has fallen very sharply, and therefore the growth of workers has really stopped. It's really stagnant. But at the same time, demand has also fallen. And so demand for workers, so payroll job creation has also fallen, and they've kind of fallen in tandem, which is why the unemployment rate has been pretty stable for about a year. So in a way, demand and coincidentally, perhaps to some extent, demand and supply for workers has fallen. In terms of the effect on the labor market, right now we're still at full employment, and labor force participation is still strong. Wages have moved back down to levels that are now pretty sustainable, given an assumption about productivity. So the labor market's in a really good place. Longer term, the effects of immigration are not thought to matter much for inflation. The effects on demand and supply will more or less cancel each other out. So we wouldn't expect there to be a big impact on inflation.
You've seen in recent weeks substantial talk about layoffs in government, as well as freezes in research establishments and universities in jobs. How soon and how big will this be in its impact on labor markets?
So it's too soon to say, but what I can say is, of course, the people being laid off in government, this is highly significant to them. We don't know how big that's going to be. Right now, it's not big enough to affect a workforce of 170 million people materially. In terms of the cutbacks in funding and for science and things like that, we do see in areas, particularly in cities that have a lot of universities and research hospitals and research institutions, we're really hearing significant layoffs and significant impacts on employment. I don't know how much that will total up to. And of course, in addition, cutting back on scientific research may have implications for economic growth, for productivity, for health, for all kinds of things. But those are very difficult to estimate in real time.
Now, given that we're talking about the future, you may be confronted in the not so distant future with both higher levels of unemployment as well as potentially higher inflation. And of course, the policies that each one requires could be different. You talked a little bit at the podium about how the Fed would see these two and how it would address it. Just giving you a chance again to elaborate on that.
Right, so most of the time, when the economy is weak, inflation is low, and unemployment is high, and both of those call for lower interest rates to support activity, and vice versa. So most of the time, the two goals are not in tension. And they're not really in tension now. The labor market is still strong. But the shock that we're experiencing, the impulses we're feeling are for higher unemployment and higher inflation. And our tool only does one of those two things at the same time. So it's a difficult place for central banks, to be in terms of what to do. And so the best we can do is we actually have a little provision in our consensus statement, which is the thing that we vote on to embody how we approach these questions. What we say is we will look at how far the economy is from each of those two goals, and then we'll ask, might there be different paces at which they would approach those goals? We'll look at those things and think about them, and we'll make what will no doubt be a very difficult judgment. Again, we're not experiencing that now, but we could well be in that situation, as I mentioned in my remarks.
Just want to pick up on a word that is often used today, uncertainty. As a respondent to a Dallas Fed survey said, I've never felt more uncertainty about my business in my entire 40-plus years career. The worry today is not just about immediate policy uncertainty, but an entire change in the U.S.'s economic philosophy. Not just policy uncertainty, so to speak, but structural uncertainty. One of the effects, as you've pointed out, of higher levels of uncertainty is that firms postpone investment. For instance, even after the tariffs stabilize, firms that contemplate reshoring production facilities will hesitate, not knowing if the tariffs will be reversed in the future, maybe by the next administration. How do you take such longer-term uncertainty into account in your policies?
Mo Mirza has become a member.
Let me just agree that what comes back very strongly, and everyone will understand this. These are very fundamental changes in, long held in some cases, policies in the United States, and there's not any real experience. I mean, the Smoot-Hawley tariffs were actually not this large, and they were 95 years ago. So there isn't a modern experience of how to think about this. And businesses and households are saying in surveys that they're experiencing incredibly high uncertainty. There's a lot of research, some of it from the Fed, showing that does lead to businesses and households stepping back from decisions, which of course makes common sense. And you hope that that's something that you go through a phase, and then you know what things become more certain, and therefore people can resume normal economic activities given their understanding of what is the new normal. I mean, your question really is, what if the uncertainty remains high? I think that's a difficult environment. I think people's expected rates of return would have to be higher. I think people would that would weigh on, to me, investment just in general. If the United States were to become a jurisdiction where risks are just structurally higher going forward, that would make us less attractive as a jurisdiction. We don't know that at this point, but I think that would be the effect.
Well, let me turn to financial markets. We've seen some volatility, especially stock market volatility. I mean, the levels of the VIX are up to the levels they were in the early days of the pandemic, coming off somewhat now. Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
He's not going to say that.
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing what's going on. And, it's really the policies, particularly the trade policy. And really the question is, where's that going to come in? Where's that going to land? And we don't know that yet. And until we know that, you can't really make informed assessments that would still be highly uncertain. Once you know what the policies are, it'll still be highly uncertain what the economic effects will be. So markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning, conditional on being in such a challenging situation. Markets are doing what they're supposed to do. They're orderly, and they're functioning just about as you would expect them to function.
So we've seen volatility also in the bond market. And at a time when usually there's a flight to safety, we saw yields on the German Bund and the Japanese government bond come down, but we saw yields on US Treasuries go up. What do you attribute this to?
So I would just say the same thing. I think it's very hard to know in real time. I've had a lot of experience with significant moves, for example, in the bond market, where there's a narrative that people land on, and then 2 months later, you look back and go, that was completely wrong. So I think it's very premature to say exactly what's going on. Clearly, there's some delevering going on among hedge funds in levered trades and things like that. It's also, again, it's the markets processing historically unique developments and with great uncertainty. And I think you'll probably see continued volatility. But I wouldn't try to be definitive about exactly what's causing that. I would just say markets are orderly and they're functioning kind of as you would expect them to in this time of high uncertainty.
So the Fed in its last meeting slowed the pace of shrinking of its balance sheet. Was this driven by uncertainty about how much reserves and liquidity the market needed, and you wanted to take a little more time to find that out? And flip side, you said the market was orderly. What if market disruptions emerge? Would the Fed intervene?
So
he's not going to answer that.
We think that reserves are still abundant. So we don't think we're close to the point, particularly close to the point where we would stop. But we were facing a situation in which, for other reasons, there were going to be big flows into and out of reserves.
Everyone who subscribed, thank you.
It had to do with the debt ceiling and the Treasury General account. For those of you who are Treasury market people, that'll make sense. But while those big flows are happening for over a period of 6 months, we would actually be shielded from being able to see evidence that we were or were not getting close to the level of less abundant reserves. And so we decided to slow the pace. We thought about pausing And instead, we debated it. It was one of these great debates that we have at the FOMC. We decided to slow the pace instead. And people really came to see the merits of that because, you know, the slower we go, the less, the smaller the balance sheet can get without disruptions. And we want that process to continue. And now it's at quite a slow pace. So we think that's a really good thing. So that means it can go on for a longer amount of time, and we'll be able to reach kind of very
Links
carefully
in the chat if you want
what
my
we
mug.
think is the right level of reserves.
It's signed as well.
Still plenty of reserves.
What about the international dollar-based system? With all these disruptions, do you stand ready to supply dollars to central banks as you've done in the past when there's been a global shortage of dollars?
Sure, absolutely we do. Just for everyone's knowledge, we have standing dollar swap lines with 5 large central banks, and they go to the jurisdictions where there are big overseas dollar funding markets.
Yes, this is live.
Those are overseas markets where, for example, a European or Asian institution is buying an asset-backed security that is backed by loans to American consumers. So in effect, these are loans to American consumers. And we support that. We want to make sure that dollars are available. They need dollar funding to hold those dollar assets. So the way it works is, when needed, we lend to the central bank in dollars, and they pay us back in dollars. They then pay in their currency. They lend
Stand by.
in dollars. And so we take no credit risk or anything like that. And it supports dollar funding markets. Dollar funding markets are very sensitive during times of crisis, and it's very helpful. The reason we do it is it's really good for U.S. Consumers. So we'll continue to do that, just as part of the dollar being a reserve currency, the reserve currency, most important. And we will do that.
You mentioned amongst the issues you were focused on was the U.S. fiscal situation. Well, clearly, U.S. sovereign debt continues to rise. And what are your thoughts on the longer-term implications for interest rates and economic stability? How much further can we go in terms of national debt before we cross a line that might be unsustainable in the long term?
So the U.S. federal debt is on an unsustainable path. It's not at an unsustainable level, and no one really knows how much further we can go. Other countries over time have gone much farther, but we're now, we're running very large deficits at full employment. And this is a situation that we very much need to address. Sooner or later we'll have to, and sooner is better than later.
Great answer.
In terms of, if I can save from my time working on these issues, it's not the Fed's issue, but if you look at a pie chart of federal spending, the biggest parts and the parts that are growing are Medicare, Medicaid, Social Security, and now interest payments. And so that's really where the work has to be done. And those are issues that can only be touched on a bipartisan basis. Neither party can figure out what to do without both parties being at the table. So that's critical. All of this domestic discretionary spending, which is essentially where 100% of the conversation is small as a percentage of federal spending, and is declining it's already declining as a percentage of federal spending. So when people are focusing on cutting domestic spending, they're not actually working on the problem. Domestic discretionary spending is already going down. I like to make that point because so much of the dialogue that the politicians offer is about domestic discretionary spending, which is not the issue.
Well, let's turn to stability and regulation. Turning to the U.S. financial sector, we still have some concerns about distressed commercial real estate loans on bank balance sheets, whether they've been fully dealt with so far. There's some sense that they haven't. Add to that the very rapid growth in various forms of private credit over the last few years, which arguably haven't been tested by a full-blown recession. How would you put the resilience of our financial institutions at this point and their ability to weather potentially uncertain times?
So I think our banking system is well capitalized with liquidity and is quite resilient right now to the kinds of shocks that it may face. I do believe that. In terms of the commercial real estate, there are and this has been the case, really, we've been working on this for 4 or 5 years now. There are some banks, it's mostly medium and small-sized banks who have elevated concentrations of commercial real estate, some of it troubled, and we've been working to make sure that those banks have a plan, have capital, and can absorb the losses that they're doing. So, and that's been going on for some time. The very largest banks don't tend to have high concentrations, so this is a problem that we have known would take years to work through, but we're really well into the process of working through it. In terms of the non-bank financial sector, it's grown enormously. The provision of credit by non-banks has grown just really fast. Most of it has been funded, though, with a private equity-like structure where it's limited partners who are signed up for 10 years to a general partner to invest that money. They're not depositors who can run. You know, your money's committed. And so that funding model is kind of run-proof. That isn't some law of nature, though. So when you do start to see shorter-term funding creeping in, to your point, though, Raghu, this very fast-growing and now quite large private credit part of the economy has not really been through a significant credit event or significant. It's really grown since the pandemic, and so just for that reason and for how fast it's growing, we have a close eye on it. It doesn't have the same kind of prudential regulation, though, that the banking system has. So we're watching it carefully. And, you know, as I mentioned, it's a more stable funding source to the extent its institutional investors signed up for a long period. But we're watching carefully.
Right. Wearing my banking research hat, actually banks are also involved in funding these institutions in a big way. Yeah. We do know the administration wants to relax regulations in many areas, one of which may well be banking. What can you tell us about the Basel III endgame, so to speak, which is, you know, at this point primarily focused on additional capital for the large banks?
You know, the Fed view, and my view, is that we should proceed to complete the Basel III accord, and we would have to do that, and would look forward to doing that in conjunction with the FDIC and the OCC. But our view is, and I think the bank's view as well, is we should complete that. You need international minimum standards. That's kind of a common good, and you know, we're not bound by them. Really, nothing. The United States has plenty of input into what those accords contain. So our view is strongly that we should complete those, and we could do it, I think, relatively quickly. We're not so very far away from what would be a good, I think, outcome.
Well, let me move to something which is more about technological change and new kinds of instruments, cryptocurrencies. How do you see the potential for more favorable regulations coming on them, and potential risks from that for the system?
You know, so we went through a wave of failures and fraud and things like that were the headlines for a couple of years, and I think what you see now is, and during that period, by the way, we worked with Congress to try to get a framework, a legal framework for stable coins, which would have been a nice place to start. We were not successful. I think that the climate is changing, and you're moving into sort of more mainstreaming of that whole sector. So Congress is again looking at both the Senate and the House are looking at a framework, a legal framework for stable coins. You know, depending on what's in it, that's a good idea. We need that. There isn't one now. And stable coins are a digital product that could actually have fairly wide appeal and should contain consumer protections of
I hope you're enjoying the visual experience. I've used my memberships to upgrade the studio to be able to provide
some of the
visuals over the top of the live broadcast.
Other bank
I
regulators
hope you like
took an
it.
even more conservative perspective on the guidance and rules we imposed on banks. I think there'll be some loosening of that, and I think we'll try to do it in a way that preserves safety and soundness, but that, you know, permits and fosters appropriate innovation, but that does so in a way that, again, doesn't put consumers at risk in ways they don't understand or make banks less safe and sound.
You have a policy review underway. Now, surveys recently tell us there seems to be a distinction between a rise in the level of prices which is what the public seems to worry a lot about, and the rate of increase in prices, which certainly they worry about in passing, but the Fed worries much more about. That is the rate of inflation. So even though we're coming down to 2%, people remember that over the last few years, it's been over 20% increase in prices. So as you start thinking about the policy review, is there any thought about how you might want to address this sort of challenge, that it's the path of prices as much as the rate of change which matters?
First of all, I think you're right, and I think the public is right. When we say inflation is back down to 2%, 2.5%, and we think that's a good thing, it is a good thing. But if you're paying 20% more than you were paying in 2021, that doesn't help you much. You're still paying a lot more than you used to be paying for the necessities of life. So it's just another way of saying people hate inflation, and it's easy to understand why. All we can really control.
Thank you. I'm glad you're enjoying it. I invest everything back into the show to hopefully give you better service.
In the world we were living in, prices don't go down in the aggregate except in extreme times that we don't want to court. So I don't think we couldn't have a framework where we're going to bring prices down by 10% or something. That's not something we'll be looking at. We're essentially looking at the best way to foster 2% inflation over time. And the things we did back in the changes we made in 2020 were really innovations around what to do when you're stuck near zero. Now we're well above zero, and it may be that we still need to have in our framework a way to deal with that, but perhaps the main case is not one where you're dealing with the effective lower bound, and that would be a framework that looks a lot more like the one that we had before 2020.
Now, one of the tools you brought in to deal with the zero lower bound was quantitative easing. But you've also used quantitative easing to fix disruptions in the financial markets. Are you going to be more specific about what your objective is with quantitative easing as you go through this review?
So in the beginning, it's typically, we're using it for financial market function. That was the case with the global financial crisis and with the pandemic. And we did try to explain ourselves through the pandemic, and our explanations did change. But I think it's fair to say we might have done a better job of being clear about why we were doing, and that's something that we're aware of and looking at.
No discussion is complete without talking about AI.
Yeah.
With AI coming fast and furious, it could affect productivity, it could affect employment. There are some people who say we will see for the first time technological unemployment in a serious way with AI. What are your thoughts about it, and how will it impact the Fed going forward?
So like everyone who's been exposed to what it's capable of, it's beyond, I started thinking about it as like a better version of Google, but it's not. It's like a better version of a person, it can do amazing things. And so the question is, all through the 250 years of technological innovation, technology evolves and people worry that it's going to replace human labor and people will be unemployed. And that hasn't been the case. It may be the case in the short run, but in the long run, what it's done is raise human productivity and therefore living standards. So is this going to be the case where it eliminates more jobs than it creates? And we just don't know. You come back in 20 years, will it be the case that just people are much more productive in their work because of AI? Or will it be the case that AI has just replaced a lot of people? And I think it's very hard to say, but it truly is remarkable in what it's capable of. And it's, we had a demonstration by a Wharton professor recently, and you speak to it like it's a person, and it kind of responds like a person, and the things that it can do are really amazing. By the way, this is early days. They're talking about even the next couple of years will bring more dramatic breakthroughs. So I think it's one of the 2 or 3 things most likely to bring dramatic change to the economy all around the world in the next 20 years. And I'd say very hard to say how it shakes out.
Let me turn to your job. An important man once said of your job, it's the greatest job in government. You show up to office once a month and you say, let's see, flip a coin. And then everybody talks about you like you're a god. What is it that you normally do every day in the office? Is it fulfilling and, dare I say, enjoyable? And do you really feel like a god?
So I would agree. I think it's the best job in government. I would agree. I really do enjoy it. Yes, I love the job. It's a great honor to serve. It's quite humbling because, you know, everybody makes mistakes. It's just the economy is just not very predictable. All of that is true. And I do what everybody expects me to do. I read. We do a little more reading though as part of our daily. My colleagues and I do part of our daily regime than a typical executive would do. In terms of being a god, I would say that we are blessed with a large number of amply compensated critics who would kind of tend to undercut that. So we don't feel like a god.
So let me go to the more mundane. In that office, what are the key indicators you look for? What are the sources of data that you go to as you try and make up your mind?
So, I'd say start with labor. There's more labor market data and better reliable labor market data than probably anywhere else. And it's just a lot of data. And, it's new jobs, it's payroll, it's wages, it's participation. You can break all of those down in different categories. It's a million different things. So there's a lot of labor market data. It's a great field if you're going into economics because there's just so much to do. So and then we look at the inflation data. Also, I keep track of global developments pretty carefully, and I talk to my global counterparts pretty regularly just to stay aware of what's going on. Financial markets are really important, and you can and lately something that we're paying close attention to, as you would expect, what's going on around the world in currency markets, in fixed income markets, in equity markets, all of that. For me, though, my background was more in the private sector and as an investor, and for a significant part of my career. And I have to talk to outsiders about what they're seeing and what they're dealing with for it to really kind of fit together for me. I can look at only so much data, and but to really get the story and the narrative, it's more talking to outsiders and anecdotal data does help things kind of fit together for me, I would say.
Yeah, you told us about speaking with business people last night and getting a sense of what was going on in the Midwest. Let me turn to Fed independence. You've reiterated that you intend to stay in office until the end of your term, and that certainly reassured many in financial markets. What are the levers the government or the legislature have to pressure the Fed? And should one worry about threats to the Fed's independence once you're gone?
So our independence is a matter of law. Congress has, in our statute, we're not removable except for cause. We serve very long terms, seemingly endless terms. So we're protected in the law. So, Congress could change that law, but I don't think there's any danger of that. Fed independence has pretty broad support across both political parties and in both sides of the Hill. So I think that's not a problem. There's a Supreme Court case people will have read, probably in today's Journal, at which the Supreme Court may decide whether independent agencies generally, whether their authorizing laws can contain a provision that prevents the president from firing members of a commission other than for cause. And that's a case that people are talking about a lot. I don't think that decision will apply to the Fed, but I don't know. But it's a situation that we're monitoring carefully. Generally speaking, Fed independence is very widely understood and supported in Washington, in Congress, where it really matters. And the point is, we can make our decisions, and we will only make our decisions based on our best thinking, based on our best analysis of the data about what is the way to achieve our dual mandate goals, as we can to best serve the American people. That's the only thing we're ever going to do. We're never going to be influenced by any political pressure. People can say whatever they want. That's fine. That's not a problem. But we will do what we do strictly without consideration of political or any other extraneous factors.
Hear, hear.
Well, I have time for one more question. I know the question that's on all your minds. What are you going to do on interest rates next? But I'm not sure that you know, and I'm not sure you would tell even if you knew. So I'm not going to ask that question. The question I want to ask is a more personal one. What is it that you'd like to do most at home after an exhausting day flipping coins in the office?
You know, I play one of my guitars. I do Zoom calls with my kids and my grandkids, and I go to the gym a lot too, just to stay in shape.
We need you healthy. We need you healthy. Thank you very much, Chair Powell.
Thank you.
And please join me.
That was Federal Reserve Chairman Jerome Powell speaking at the Economic Club of Chicago. A few big headlines that caught our...
Okay, so there we go. There's Jerome Powell. You chose the little ladies, a little fishy, the little fellas, or let's horse around. You chose let's horse around. That's what you got right there at the end. I did have some more adult versions of options to give to you, but I thought probably not. So we'll keep it strictly professional. It's not past the witching hour just yet. Right, there we go. Now we're starting to get the rebound. I bought another 10 shares at near the bottom here. I'll share with you. Watch, it's going back up again. Didn't go as low as my 270, but I did get another 10 at 483. 483. We're now at 483, coming up at some change. So there we go. Another 10 shares on this dip. This is what happens when Jerome Powell speaks. It presents opportunity. Those that get fearful run away. Those that understand the value decide to buy some more. So the question was green or red? Neither. Unfortunately, it's still blue in the studio. Sorry about that, but it is. It will turn the whole studio blue. There's nothing to celebrate here. Let me come back to there. There we go. It's a blue. I don't want that. I don't want that one. I want to do it this way. I want to do that. There you go. It's a blue day. Neither up, neither down. It is, of course, red today, but nothing to learn. I hope you was able to get a bit of a discount there and buy that dip. So what we're going to do now is we're going to invite you all to call in. We are in members only mode. Members, one of the perks that you get as a member is you can be live on the show. Whether you want to call in for a second and ask me a quick question or you want to be on the show for the next half an hour, that's up to you. We are going to end this show in about 15, 20 minutes, and then I'm going to take a break. And then tonight, it's walk and talk. There'll be no closing bell. There'll be a walk and talk show. So if you are a member and you've rung the bell, you will join me tonight outside on a walk and talk. It's where we go for a walk, we talk about the day, and we share our thoughts. And you can all be with me on the walk and talk. If you've rung the bell, you'll be notified. Let me show you how you do that. When you click subscribe, you make sure that you've rung the bell, you'll be notified, or look on the homepage of the channel, see that I'm live. It'll be in a couple of hours from now, walk and talk. We haven't done it for a while, been too busy buying the dips, working overtime. We've done all that now, and we're fully invested, and now we're enjoying. Set the bell to all, and you will get everything you need. All right, so the phone line is open. Let me give everyone the link. Here comes the link right now. So here it is, live video phone in. Okay, you must tell me, you are calling in before you call. Okay, there we go. Pin that to the top. You must tell me that you are phoning in, because I don't go and look until I know that you are phoning in. Okay, it's a security measure. So if you are phoning in, click on that link. Let me know in the chat you're phoning in, and I will bring you on the show. So if you'd like to have your say, you can be on the show. We've got 10 spots. These are the 10 spots. There are 10 spaces here. And our first guest is going in spot number 8. Let me put him on the screen. Spot number 8. There is Simon, Kent Paranormal. Good afternoon, Simon. How are you?
I'm good, thank you. How are you?
I'm very well. I see you're driving. Please be careful if you're driving, talking to me. What do you feel about the Fed? Well, first of all, just so everybody knows, we've got people all around the world tuning in, 920 people watching at the moment. Where are you calling in from?
So I'm calling in from the UK. I'm in Kent at the moment.
Wonderful.
Last week I was in Cornwall.
Wonderful. Lovely to have you here, Simon. Well, you just heard from the Fed. The markets are rebounding very, very quickly. I bought another 10 shares at the bottom, and it's going up again. That's very nice indeed. Added to my position. What did you learn from the Fed? Was you happy, disappointed? What do you think? What's your reaction?
I was well happy. I didn't think that he was going to do a rate cut, to be honest.
No.
Even though there was some good results recently.
Yeah.
But as he said, it's not quite there yet.
Yeah.
And the way he was talking was showing everyone that he is definitely all calm. He's not influenced. What he said, not being influenced by Trump, by politicians, was fantastic. When he answered that with that, I thought, brilliant, fantastic answer.
Yeah, I'm totally happy. A Fed in charge, that's what you need. Don't make it political. We have the similar situation in England with the Bank of England. It runs itself. It's not influenced by politics, the government. And he feels very much in control. He feels the economy is strong. He feels inflation's coming down steadily. Transitory inflation. Very, very happy to invest. I am buying the dip. Very, very happy. And as we can see, it's already going up. We've only got about 5-10 minutes here. If anybody else would like to call in, we've got Simon here calling in from England. If you'd like to call in, the link is in the chat. Let me know you're calling in. I'll pick up the phone to you. You can ask me a question about the YouTube, a question about how the membership works, or how comments work, or how to get onto Discord, or your opinion on the markets, or what I feel about the economy, whatever you like. So if you want to call in, you've got another few minutes. If we don't get anyone else call in, I will wrap this show up in a few minutes' time. And I am going to do walk and talk in a couple of hours. So I will send everyone here to the extra channel so you can get a replay of what you've just heard. And once you've heard again from Jerome Powell, you've got all the different members around the world tuning in different times, and you can talk to our new members 24 hours a day, 7 days a week in the extra channel. Now, if you are calling in, you need to let me know you're calling in. So please, in the chat, go into the chat and tell me you're calling in. I don't know, or don't look on the software until you tell me you are calling in. So if you want to call in, let me know in the chat you are calling in, so I can go and check in the software to see who is calling in. Saab. Saab is calling in, spot number 9. There he is. Good afternoon. It's lovely to have Saab back. We've missed him. Let me set your camera up for you, mate. There you go. Nice. You've been away on holiday, I believe, Saab. How are you?
Yeah, it was sunny in England in April, and we had the best time. But you know what? I was trying to get on my phone to check what was going on, but I just couldn't. You know what I mean? I was too involved in the wedding. So I missed you all. I've missed everybody.
Yeah, missed you too. I enjoy your calls in. It's lovely. You look bright and fresh. You look like you've had a lovely time. You look relaxed, which is nice.
Yeah, thank you. Yeah. You know, it was nice, a bit of a break as well. You know, sometimes you just need to take a little break and then come back to it. And I've been itching to get back, so it's good.
Hey, your microphone seems to be working a bit. Whatever you're using.
Can you just let that go now, please?
Yeah, all right. We'll let it go. What do you think? We've only got a few minutes to go. We've been very busy while you've been away. The channel has grown massively. I've been buying massively, like batches of 10 and 20 shares of the S&P, as you know. Yeah, massively
so
in.
We're going to start calling you a Lamborghini now because you're not just a bull, you're a raging bull.
340 with my last acquisition a few moments ago, $345,000 now invested. So we're on the way to $1 million. Just got to wait for the market to start going up and enjoy all these dips I've been buying. So
I reckon you need to up your go from $1 million to $5 million now.
Let's get the $1 million first. I feel very confident it'll be 2 million actually, but I don't want to focus on that. I want to focus on the first target and then achieve the next one. So 1 million is the target, and we'll do that, I'm sure. So Saab, how do you feel? What you just heard from the Fed?
So I think it's just what I was expecting, to be honest. I think they're just holding out till May. You know, the economy seems fine. If we needed a cut, an emergency cut, like I mentioned in the chat, then we know that economy is like going the wrong way. You know, they're still looking at the economy, that it's still okay. And it is. We've seen the rebound. We've seen the worst of it, I believe. It may go down a little more, but just not what happened before. You know, we already fell off the cliff. Now it's just just going to go, I think, sideways, maybe go down a little bit. Everybody needs to take advantage by the dips, especially all the XRP followers out there. You know, it's time to get yourself in position now, because the crypto summer's right here around the corner. And if you're positioned, you can make a lot of money. If you're not, don't be in and out trades. Just get
I totally agree with that entire sentiment. Absolutely. We've been repeating that every single day recently. Now, if you are calling in, you have to let me know you're calling in the chat. One of you said you are calling in, but you've given me the wrong name. I need to know who you're calling in. So Awesome Future 777, you said you're calling in. I went to look and I see somebody with a different name. That might be you, of course. If that's you, let me know that's you. I don't pick up the phone or take calls from anyone until I confirm who it is calling in, and then of course that way I know you're a member and I know you're who you say you are, and if for some reason you're not, then you'll be removed from the channel. So if you are calling in, let me know what name you are calling in. So I think that we do have Awesome Future, but he's not given me the right name. Until he does, I can't pick up the phone, just in case it's somebody not who they say they are. Okay, so I'm going to give you just a second. You've only got a second if you want to be quick. Unfortunately, you might miss this one. You need to be in the chat. Tell me who you are, then I'll pick up the phone gladly to you. But I need to know who you are for security purposes. We've got to know. If you were phoning in a radio show, you'd go through to the reception team. They would talk to you first, and then they send you through. Well, there's no reception. It's just me and my software. So we have to follow protocol. Otherwise, there would be chaos, and we don't want chaos on the show. So final call for it's me, Stan Miller. There you go. Now, please call back. Awesome Future, please call back. You just hung up. You told me it was you, then you hung up. So please call back, and I'll bring you in the show. You've got just a minute if you want to call in. For those of you that haven't tapped the like button, please do consider tapping the like button and consider subscribing if you'd like to. Stan, here he is. Okay, let me bring Stan in. I'll put Stan in spot number 5. Let me put Stan in number 5. There he is. Good afternoon, Stan. How are you? Where are you calling in from?
I'm doing great, sir. I'm calling from Superior, Wisconsin, in the U.S.
Wisconsin. I've got great love and interest for Wisconsin. Shall I tell you why? In England, our most romantic film ever at Christmas is Love Actually, and the story is that the guy goes to Wisconsin to find an all-American girl, and he walks into a bar in Wisconsin, and he finds the most beautiful women, one after another, just coming in, wanting to take him home. One after another, all beautiful, all in full American gear, all the big, the big cowboy hats, all the boots on, the sexy gear, all of it. He can't believe it. And he goes to Wisconsin to find his perfect woman. And then he brings one back to England. Very, very funny film. Is that how it works in Wisconsin? If I walked into a bar in Wisconsin, the women are just going to be dripping all over me. Is that how it works?
Oh, absolutely. Yeah, especially you.
I might not want to mention it to Leah. She might not agree with that. I think we've lost one of our callers, so I'm going to move you up into guest spot number 8. There we go. Right.
Nice.
Let me just adjust the camera for you. You don't need to worry about it. I'll just zoom in wherever I need to be.
Okay.
There we go. There we go. I've repositioned it for you. So, hello. Someone. Who's being told to shush?
Lucy, stop. My German Shepherd.
Oh, that's okay. You wasn't telling your wife to be shush. Okay, we'd have trouble.
No.
Oh, okay, that's all right then. So what do you think of the Fed?
It's just like Shaw said, I think it's the way that we expected it. I know we have come down about as low as we can, and I think we're just going to go up from here.
I totally agree with you. There could well be a slight more of a drop. There could be, but I'm all in. I'm all in with my cash, or I'm all in my margin, but I'm still a long way off from a margin call. And I want to explain why this works. A lot of people go, "Oh my God, you bought so much, you're using it all," and so on. When you buy these dips, you actually protect the ones above if you continue to buy lower. It takes a bit of nerve to do that, but you have to have an understanding of how it works.
Sure.
The time for paying off margin is when it starts going up and so on. When it goes down, you've got to keep digging, you've got to keep earning money, digging under the sofa, finding a few more pence. In my case, going live 12 hours a day, all day, every day, earning as much as I can to buy the economy and buy the American businesses, which is what I'm doing. And
Amen.
So yeah, absolutely.
Well, I had a question. I'm in top 2% of XRP holders since back in 2017.
Are you?
And I'm
How
just
do you
wondering.
know that? How do you know that?
From the rich list.
Oh, okay.
Yeah, if you go to the rich list, you can see where you rank.
Wow, I'm impressed. Could you share how many tokens you've got? What that is?
30,000.
30,000 tokens.
Yeah.
Okay, so that's in the region of about what, 65 grand, something like that.
Right now, yeah.
Somewhere in that region. Well, congratulations to you. That's absolutely wonderful. Absolutely great. XRP, our XRP family will love to hear that from you. So, what's the question you have for me?
I'm just wondering, when do you think we're going to get back above $3? Is this something that we're just sitting on for a little while here, and maybe June,
XRP
July,
you're
August?
talking about, right?
XRP, yeah.
Well, as you know, you probably know what I'm already going to say. The expert on that is Sensei. He's the expert on crypto. I'm the fundamentals, the relationships, and all the other stuff. And that's what I focus on. But I'm with Sensei. We talk a lot about XRP, and I'm sure he will say the same thing. We can see $3 very, very quickly. $10 is our target in the near term. We can see that happening. We just got to get over the nonsense of the tariffs, and I think we're gonna go up. As you know, I only own the S&P for integrity of the show. I want to be completely transparent. I don't pump and dump anything. I'm not like other YouTube channels. But
right,
of all the crypto, it would be XRP for me. I'm very much looking forward to seeing Ripple IPO and seeing it do well, and then potentially enter the S&P. That's how I will get exposure to XRP and the real workings of it, if you like. But yeah, I can safely see it going to $3 quite quickly. I just wish XRP investors would hold on rather than scratching around for a few cents here and there when they're missing the point. I mean, why on earth would you put money in a speculative asset? It doesn't produce anything. It's not like Coca-Cola or whatever. It doesn't make anything you can sell. You're buying a speculative asset and you're just taking a few cents up and down. It seems a bit silly. When you bought it, I'm presuming, to believe at least it got to $10. So I mean, why would you buy something for $2? That's purely speculative if it wasn't going to make $10 or more. So why are you selling it for $2.12 and $2.13? It seems a bit silly to me, but that's what people do.
Absolutely. I haven't sold any of mine that I've gotten.
What's your average price?
I found out from a friend years ago about XRP, and I don't know who his contact was, but he was absolutely certain that this was going to be the big cryptocurrency that's going to move throughout the world. And with the cross-border payments and everything, all the cryptos are going to ride on this, and it's going to be used for all the cryptos. So it's really exciting to see where it's going, and just to sit and not sell anything and watch it go up and down, up and down. I don't have to stomach the lows because I'm in for the long run.
What price? What's your average price?
It's about 80 cents.
Yeah. I actually bought it. You'd be surprised to know, despite that I'm not in it, I actually bought it for 38 cents when I owned it.
Yeah, I did buy at 30 cents before.
You bought some on the way up as well. Yeah.
Right.
Nothing wrong with that. Nothing wrong with that at all. Well, congratulations. I'm quite interested. When you said you're in the top 2% on the rich list and you said 30,000, is that a retail list or something like that, I'm assuming?
It's a list anybody can find. Just Google the rich list.
But is it a retail? It's not the institution, surely. It's just a retail list, is it?
I think it's retail, yes.
Because that's not that much, really, is it? When you think about it,
right?
You know, top 2% of all the retail. I mean, I could do 10 times that much today, and I could be the number one XRP retail investor in the world. I might do it.
There you go.
I might wake up tomorrow morning and say, do you know what? I'm going to be the number one XR because I've got 340 grand, so I could easily do that.
There you go.
So there's a big jump between, you've got the people who are like 5,000, 10,000, 20,000, 30,000, 50,000. And then there's a huge jump for the top owners.
Yes. That is like, there's a way to explain that. All of us here are 95% richer than everybody else on Earth. Right? The fact that we have electricity, we're in America or Europe for that matter, Great Britain,
right.
You're 95% richer than everybody else. You think, oh my God, I'm nearly as rich as Elon Musk. No, you're not. Because Saab just made the point. The last couple of percent, it gets dramatically bigger. What that tells you is all the money and all the power and all the world is owned by just a handful of people. So, yes. And I did this once. I went on a government website which tells you exactly how rich you are. And I put my income in, and it wasn't even important what my income was. The fact I lived in the UK at the time, and I had electricity and healthcare and water, it said you're 95% richer than everybody else. So then I started to add zeros to my income, and to move like 0.1%, I added like 10 zeros, and then I added 100 zeros, and then I moved up 1%. So it's quite a misleading. It's like me, when I hit 100,000 subscribers, which we hope to by the summer, I will be 0.8 of 1% in the world of all YouTube channels. And that sounds, oh my God, that's amazing. You're like Mr. Beast. But remember, most YouTubers don't have any videos at all. So it's still really good. I'm still in the top 0.8 of all channels, but there are millions of channels with no videos. So you guys just got to
That's right.
balance that. But I love it. I'll take it. 2% from the top. I'll take it all day long. Sounds great.
Amen.
I'm very happy to. Yeah, absolutely. Take every little thing. I always remember, and I use this as a sort of little make people feel good. Someone else calling in. Paul Griffith is trying to call in. He's given me his name in the chat. Let me just put him in spot number 5. We just lost him there. Let me just put him in spot number 5. There he is. Welcome back, Paul. He was with us a moment ago.
Hi, Martyn. Are you doing all right?
I'm very well. I'll come to you in a second. I always like to have use this as an example. When people try to achieve anything in life, break it down to small pieces. Because if you focus on something bigger, you never achieve anything. Just little tiny things. And when I run the London Marathon, it wasn't 26 miles. It was 26 individual miles, and every mile was its own little challenge. And I found things down the road to focus on. If I can just get to that water station, just get to that person. And before I knew it, I got past that person, and now I'm focusing on the next thing and the next thing. And all of a sudden, 26 miles was done. So in life, don't focus on the end goal, focus on the next step and just keep moving forward. And you'll look back one day, as I did yesterday. In fact, last night at dinner, me and Leah went, bloody hell, 77,000 subscribers. Every now and again, it just dawns on us and we go, bloody hell. And now 10,000 people are watching shows regularly. Only a year ago, it was 200. And Saab will tell you, he's been here for ages. And nuts. So you're right there, mate. Focus on it, and congratulations on your position in XRP. Paul,
Thank you.
You're welcome. Paul Griff, I think it's Paul. Where are you calling in from, Paul?
Manchester, England.
I love it. I visited Old Trafford several times. My dad won tickets for Old Trafford. I saw David Beckham play. Imagine that. There you go. Are you a Man United or Man City supporter? Or neither?
A blue.
You're a blue man. I won't mention it again then. I won't mention it again. For those who don't know, Man City is blue. Saab's cheering. He don't know nothing about it. He's from America. He's one of those couch supporters. He's never been there.
I'm a Newcastle fan, mate. I'm from England. I lived here for 17 years, but I'm a Newcastle United fan. But I lived in Manchester. Yeah, mates. All right, I lived there.
Mate.
Yeah, mates for the last 5 years. And down with Old Trafford, up with the City.
Oh, hello.
Get up.
Hey, Paul, we're running out of time. What can I do for you, sir?
No, I'd just like to say thank you, Martyn, for everything you do for me and all your community. I come across you around 3-4 months ago, and I can't stop watching you. I've become a member. I've joined your Discord, but I need to upgrade to premium. I think what you do in the content you and your team provide is phenomenal. You're here every day, and your advice and everything is really good. I've been investing for around 3 years myself, so I was a late comer. In COVID, I started. I was accumulating £50 a week in stocks and crypto, splitting it in between the both. November last year, I had a big payday when Donald Trump and in the election, he gave a big, massive rally. So I currently hold S&P, like yourself, and that's only through yourself, where I've been trying to sell a lot of my XRP and put it into that. And I currently hold around 12,000 XRP, which I'm trying to dwindle down and get it over the line into S&P and NASDAQ. And I think, like you said, stocks and shares are a lot better than the crypto. Crypto can go dramatically down, which is frightening. So you've taught me a lot over the last 3 months, and I appreciate it.
Well, thank you very much. Much appreciated.
And I bought my mug. I got the special edition mug, and you posted it yesterday because I got the email.
Oh, there we go. So, well, I didn't post it. Sensei takes care of the shop. He runs the shop for me.
It was it a 1 of 10?
Oh, which one was it?
It was the one what Sensei had on the, was it Liberation Day you was advertising it?
Oh, was it the win?
10. Yeah.
Oh, yeah. So yeah, 1 of 10. That's right. I think that's sold out now, I think. Yeah, good. Well, thank you very much.
Yeah, I think it sold out within 10 seconds, didn't it? So yeah, I'm
10 seconds.
I can join with my cuppa.
Well, that's great. Thank you very much indeed for that. Absolutely brilliant. Well, is there anything else you'd like to give me your final thoughts before, or is there a question you have for me?
No, there's no questions. I just want to thank you for your support.
Oh, well, that's amazing, mate.
And I got Space, which I've never really liked, but I ended up buying it at $2.47. So I've got $1,000 in that. Well, $1,200, £1,000 in there. And I think when Delta comes out, I think you're right. It can get to that $80 mark, $100 mark.
Oh, certainly, as long as it doesn't crash and blow up. But we've been good. We have to say that, because if it crashes and blows up, your stock's not worth anything. I mean,
well, I think I could have bought near enough right at the bottom.
Yes, we certainly under the cash value and the balance on the books and the assets. Yeah, it's definitely a good time to buy it. No question. I bought it when it was $70, and that's not $70 by today's money. That's $70 times 20 by the old money. So I came in at the top. Yes, I came in. I lost 30 grand when I first started. Investing, thought I knew what I was doing. I had to lose a lot of money to learn how to do this game, and I did lose a lot of money, and I'm still trying to make that back. But ever since I've been doing the right thing, I'm slowly coming up until Donald Trump came in. It's all back down, but it's allowing me to accumulate more, like we're all doing, and waiting for the day when it finally settles, which I believe it will. Well, that's very nice of you to call in. I really appreciate that, mate. Very kind of you.
Thank you very much, and I wish you all the best for the rest of our journeys together.
Yeah, I love it. Final thoughts from you, Saab?
Yeah, guys, stay safe out there. Don't get all caught up in all the sentiment and all, every little, don't hang on every little word that everybody's saying. Just take your time, invest carefully, know what you own, and just be safe out there, man. Let's make some money this summer.
Yes, I'm looking forward to the summer, very much so. Our final thoughts from Stan, please.
I just say go XRP. We're going to be just fine. Everything's going to be bright in the future, and God bless everybody.
I love his radio voice. Don't you love that radio voice? And that's a proper American.
Is that what I have?
Yeah, I could hear you on the radio. See, I've got the. If I do this, look, late night on the Bob Harris Radio Show. Tune in.
There you go.
See, I've got it if I do that. But you've got it naturally.
You sure do.
You've got it naturally.
Well, thank you.
So let me just put this now, live now on Extra. So what we're going to do now is tune over to... Oh, hello, we got a bit of a surprise here. Live now on Extra. We've got a gift from one of our members who's just donating memberships. How very nice is that? Carlin D. Ross has just donated out of his hard-earned money 5 memberships. That's very, very kind. Everyone has just been accepted, so that's done. We've got Keith has just won a membership. See who else has won a membership? We have Heights, Cindy, Q, and All Smoke not All Smoke Barbecue, beg your pardon. Who was the other one? Oh, Peter Puff FPV has won a membership. Fantastic stuff. All right, you'll be able to call in, access many of the perks and benefits. Right, thank you guys for calling in. I appreciate your time and good luck with XRP. Both of you have got that. Good luck to you. Thank you. There
God
you
bless.
go. Thank you very much. Absolutely wonderful. Wasn't that great? Some good calls today. Some new people as well, which is really, really nice. Really do appreciate it. Right, the phone line is now closed. The show is about to come to an end. Unfortunately, we didn't get the bounce from the Fed, but it is early. We've got an hour to go before the bell goes, so I expect a bit of a bounce as we come into the close. I would expect, anyway, that would be normal after a Fed report, like a Fed speech like that, should I say. Highs, we've got someone from Germany. That sounds pretty good. Ich kann nicht sprechen Sie Deutsch sehr gut. Let me put the comments on the screen. What we're going to do now, we're going to send you to the Extra channel where you can carry on supporting each other. I'm going to replay today's events because we have different parts of the world waking up now and they watch me in different parts of the world. So if you see here, we will restream the show. So it will be in this box here. We'll restream from this morning. And here it says restream today's shows. The chat is live 24/7 support. So in the chat here, we have all this live conversation and you can talk to me. This is a real live. This is me live sitting here. So you can talk to me. I'm always checking. I can come back live, do a report, whatever it might be, and join in. Now, what I will do is if you're in the chat on Extra, it is open for everyone to listen to, but you are talking to real investors. So we have members only. It's 99 cents to be a member of this channel. I'll give you the link to Extra, and I shall also put the membership link in Extra. The same way as this channel, except it's 99 cents. That's all it is. We do that. So it's just members, just investors. We don't have bots and trolls in the chat. So it's a good, healthy conversation. And you can join us in the chat. And I will put a link in here in a minute.
Carlin D. Ross donated $5 through a super chat. As you all can see, having a membership on this channel is totally worth it. Like, sub, join.
Now, Carlon Ross, by the way, is one of my top members. I think Carlon Ross is one of my sponsor members, which is $99. And he doesn't want to be sponsored. He just wants to support the channel. Today, you saw I was trying to make it a lot more visual. I've been upgrading my systems. I'm always putting it back into the show to make it better, more entertaining, more factual, more information, and being able to go live more and more because of the member support and all the rest of it. All right. Okay, fantastic. Thank you very much indeed. So what we're going to do now is send you all over to the Extra channel for the 24-hour stream. That's going to continue now. And shortly, in about an hour, I will post in the Extra channel my walk and talk. That's when I go out of the studio and we go for a walk. It's members only. It's a members only live stream. And I will be talking to all my members. It literally is a members only live stream. It's not even available to general public. I don't mean members chat, I mean a members only live stream. I go for a walk and all my members tune in and they can talk to me as we go for a bit of an exercise walk together, and it's a lot of fun. Oh, hello, Paul Griffiths.
Paul Griffiths donated £2 through a super chat. My cup is just turned up.
My cup is just turned up. Well, send your picture into Discord. If you want the link, there is a link. We only accept members now on Discord Premium. You can sign up for it, but you won't see anything unless you go Premium. There's no access unless you pay a couple of bucks and become Premium. And when you are Premium, you can send me a friend request. I will accept it straight away. You'll be admitted straight away. You can talk to Sensei, our crypto chart expert, Ed Nevius, myself, and you can have direct private communication with me for $2 as a premium member. All right, that's it from me. Well, I'm going to give you my final thoughts now, but before I do, it's time for Day Trader of the Day. So as you can see, I'm down 6% today. That's a lot because actually I'm double because of margin. That's perfectly okay. We can live with that. So I am down today 6%, 6.1%. Let me know what your score is. Here we go as we do Day Trader of the Day, and it's time for the stars of our show. Who are the stars of our show today? Let me bring on the funky music, and here we go. So put in the score, put in the scores in the chat, your score. These are our subscribers and members, the stars of our show today. Here we go. All right, who have we got today? So new subscribers today, we have... Subscribers, we have Jo, AB Hin, Armando, Bria, Exhale, Messi. Lionel Messi just become a subscriber. Rishina, Mary, Les, Emilio, Bathin, Axe, Awesome, The Hidden Potential, Jeremy B. New members, Anders Eriksson, Investor, Carl, Mo, All Smoke, Dale, Keith, PT, Height, Cindy and Q, and Super Chats from Kent Paranormal, Carl and D. Ross, and Paul Griffiths. There we go. There are our stars of the show today. Let's see who wins. Up 80%. Kyle Riceland, you can't be up 80% on your overall portfolio unless you own Binky Bonk coin. That would be the highest ever. It needs to be your overall portfolio, not one crypto coin all by itself. There's no way you can be up 80%. Impossible, especially when the markets are down. Anyway, Samuel up 1.79. That looks more like it. Up 0.07, 4.6% up. Geez, Kyle. Yes, he's not up 80%. No one in the world can be up 80% on an overall portfolio. If it is, I want that portfolio. Down 1.63. Carl Riceland, what do you hold? Fart coin, Binky Bonk coin or something. Anyway, yes, it's not possible. Down 1.3. Okay. Time's running out. Be quick. I'm going to call a winner. Who's our winner? Up Andrew Moody up 4.6. Craig up 0.06%. My largest holding, XRP. I'm going to call it down 2.9. Carlon traded Weeble from 39.50 today, 20% swing. Lovely stuff indeed. I'm going to call my winner. My winner is Andrew Moody, up 4.6%. Congratulations to you. Oops, I've pressed the wrong button again. Damn it, I hate when I do that. Let me end that. Let me do that. Give him a big thank you very much indeed. Well done. Give him a thumbs up. Give you my final thoughts. I really hate when I press that button. I need to move that button. I keep thinking, move that button out of the way and you might not keep pressing it by accident. But there you go. Right, we're going to go over now to the Extra channel. Join me on the Extra channel. We'll rewind today's shows and then I'll be back with you for the walk and talk. You'll only know about it if you're in the Extra channel because that's where I'm going to post it. It's a members only event and you'll only get the link in the Extra channel. So if you want to come and join me on my walk and talk tonight when we can talk about the stock market as we go for a walk and talk outside the studio, then you need to be in the Extra channel. Otherwise you miss out. That's it from me. Thank you very much for tuning in. It's been absolutely fantastic. The markets are still selling off after Jerome Powell, but it is what it is. It's fine. Wait. We'll just hold on. No problem at all. I will see you back on the Extra channel right now. And that's it from me. See you on Extra. See you on the Walk and Talk. And then back again in the morning. That's it from me. Thank you very much indeed. Here are all the links. There's X, there's Instagram, there's Discord, there's the membership link. And I think that's it. Until next time, As well. Oh, did I give you the link for Robinhood? No. If you want free shares of Robinhood, there's Robinhood USA and there's Robinhood UK. If you want free shares, I get free shares, you get free shares, everybody wins. That's it from me. I'll see you back on Extra right now. If not, on the Walk and Talk. If not, back in the morning. Take care of yourselves and each other.